Hello, this is Group 58, and I am Raping Xiao. The company we analyze is Atlassian, and here are our group members. Talking about the investment recommendations, I recommend buying it. Although there are some drawbacks of Atlassian, such as low profitability and relatively weak cash flow, it has consistent revenue growth and holding a competitive market position. Then let's move on to the company and industry overview. As what SWOT analysis shows, it has strong product portfolio and other as its strengths, and opportunities such as expansion into new markets. Despite of those, it also has limited marketing and economic uncertainty as its weakness and threats. To the pestle parts, the main points of different aspects of pestle analysis are shown. Then let's have a look of the Porter's 5 forces analysis for Atlassian. Firstly, due to the barrier to entry and capital requirements are high, and there are various suppliers, Atlassian has no need to worry about the threat of new entrants and bargaining power of suppliers. However, as there are numerous strong competitors and intense market competition, the bargaining power of buyers and rivalry among existing competitors should be concerned. To the price comparison with rivals, these are the contrasts between Atlassian and three main competitors, which are Adobe, GitLab, and Microsoft. Overall, these four companies show a similar trend and same fluctuation period. However, GitLab and Adobe has obviously higher price during the whole period. Microsoft shows a more stable and consistent growth in last year. By contrast, Atlassian has more rapid fluctuation and during a decrease lately.
Atlassian had losses in fiscal 2022, but ended fiscal 2023 with 260,000 customers and $764 million in free cash flow. Despite the losses, its aggressive leadership believed the company is profitable. With $1.5 billion in cash, it sustained the losses. In the first quarter of fiscal 2023, it's made a $76 million profit with a 9% margin. Overall, Atlassian's solid financial performance and the industry domains make it an attractive investment. Despite previous losses, Atlassian's free cash flow has grown profitably, reaching $842.5 million from $750.5 million. The company boasts solid financials with $2.1 billion in cash and the equivalent $4.1 billion in total assets and $3.5 billion in debt. Revenue growth is expected to continue with an expected $950 million in the first quarter of fiscal 2024, with an excellent 4.1 star rating and a 92% CEO approval. Atlassian is seen as having strong commercial potential.
Financial ratio analysis vs. competitors. Financial analysis reveals that Atlassian Corp plc has a PEG ratio of 2.57 and 0.98% institutional ownership, without having paid dividends for years. Its 0.1% profit margin indicates challenges in managing operating expenses or pricing strategy.
Since Atlassian is one of upswing, the average annual growth rate for sales is more stable, so the assumption is that the growth is around $2,000 per year. However, if the average of the last 5 years' growth is used directly to estimate the forecast, it will cause the forecast to look very exaggerated. Therefore, our justification assumes that the company's sales will grow by $1,000 to $2,000 per year, which results in a sales and sales growth rate that is more in line with actual growth.
There are two ways to estimate Atlassian's company's value, which is DCF and multiples. As you can see in our DCF model, because company's EBITDA is negative, so it poses challenges for us to use DCF model. If the present value of enterprise value is negative, it might not reflecting the company's true value. Therefore, using multiple valuation is more suitable. Multiples valuation compares its target company's valuation to similar businesses in the same industry using a range of indicators. We picked 5 companies that are in the same industry to compare with Atlassian. However, because the share price and the EBITDA of Atlassian is also negative, so we also cannot use PE ratio and EV divide EBITDA as indicators. Then we choose to use EV divide sales ratio to determine Atlassian's value, which is around 47,000 millions. The last part is football field valuation, which provide a visual summary of all valuation on Atlassian and to display a valuation range based on those valuation approaches. Now, let's move to sensitivity analysis. The DCF model determines the value of company by estimating free cash flows and discounting them to the present. In fact, both WACC and growth rate can vary, which has a direct impact on enterprise value calculations. Following that, we use this chart to show how the enterprise value changes under various WACC and growth rate assumptions. However, Atlassian's forecasted free cash flow is negative, resulting in negative enterprise value. This might indicate model inaccuracies.
Risk analysis. Today, selling 24,216 Atlassian Crop plc shares from 24,216 on January 11th in 2024 will cost 16.2% of the portfolio value. The company has no positive projected returns and risks 2.6699% over 90 days. Atlassian Crop put option holders may sell a certain number of shares at a set price and time, profiting from price drops. Several variables may affect stock market volatility. Industry volatility may be affected by events. For instance, surf weather in a critical oil producing area might hike prices. Thus, oil distribution stockpiles will grow. Economic and political climate. New laws, trade agreements, and regulations impact industry stock prices. Risk assessment. Atlassian Crop plc investing volatility may imply a range. The recommendation. Atlassian Crop plc stock priced at $188.72 against a market value of $202.92 appears overpriced according to a model based on fundamentals such as a $51.18 billion valuation, a 0.52 return on equity, and a minus 0.1 profit margin. However, considering its robust financials, distinctive product offerings, and growth prospects, Atlassian remains an appealing investment. That's all. Thanks for listening.